Welcome to the Deep Dive. We're here to cut through the noise, take complex info, and really distill it down into clear, useful insights.
Exactly.
Today, we're tackling a really big one, a highly anticipated earnings call from that global platform, you know the one, that's completely changed how we get around, order food, even how some people find work.
Yeah, we've gone through the whole call, the reports, everything to pull out what actually matters for you.
We're not just reading numbers. We want to get into the strategy, figure out the market's reaction, and, understand what this all really means going forward.
Absolutely. There's a lot more nuance here than you might get from just a quick look at the headlines.
Okay, so let's dive in. Overall, this quarter looked, well, pretty strong. The company put up headline numbers that mostly beat expectations.
Right. Diluted earnings per share came in at $0.63. That was just a penny over consensus, so a slight beat there.
But revenue, that was a clearer story. $12.65 billion. That actually beat the street by about $180 million.
And that's an impressive 18% jump compared to last year.
You see that strength elsewhere too, right? Like gross bookings?
Yeah, gross bookings, basically the total value of everything happening on the platform leaped 17% year over year. We're talking almost $47 billion.
Wow.
And the sheer activity level. Trips grew 18% year over year. That hit 3.27 billion trips.
Billion. That really shows the demand is still incredibly strong.
Definitely.
But maybe the most compelling part is the profitability story.
Yeah.
Adjusted EBITDA.
Right, their core operational profit metric.
It surged 35% year over year. That's over $2.1 billion.
And significantly boosted their margins too, up 60 basis points, now hitting 4.5% of gross bookings.
And operating income. That was up a massive 82% to $1.45 billion.
And don't forget free cash flow, the actual cash they're generating. That grew 44% to almost $2.5 billion.
These aren't small steps. It feels like they're really showing strong operational leverage now.
Exactly. The business is scaling profitability in a pretty powerful way.
Okay, so strong results, profitability, scaling.
Yeah.
But the market reaction was a bit weird.
Yeah, a little nuanced, you could say. The share price actually dipped initially in pre-market, didn't it? Down to maybe $84.80 briefly.
Right, before it's sort of stabilized. What's your take on that hesitation? Is the market seeing something we're missing or maybe focusing too much on one thing?
It's an interesting disconnect, for sure. Management sounded really bullish on the call, very confident.
Mm-hmm.
But the market seemed a bit cautious. I think a lot of it circles back to the cost and timeline for autonomous vehicles. AVs.
The CapEx concern.
Exactly. You heard some analysts saying things like, robotaxi ROI is still years away. So maybe a bit of a prove-it stance despite the strong current numbers.
Yeah, makes sense. Okay, let's dig into their forward look then. Building on Q2, they gave some pretty optimistic guidance for Q3 2025.
Yeah, they did. They're forecasting gross bookings between $48.25 billion and $49.75 billion.
Which implies growth of about 17 to 21% year over year. Still very strong.
And their adjusted EBITDA forecast is also looking good, expected between $2.19 billion and $2.29 billion.
So that's projecting like a 30% to 36% year over year increase.
Wow.
Signals real confidence in that continued operational leverage. The CEO basically said, look, the platform strategy is working and they're still only beginning to unlock the platform's full potential.
So they see a lot more runway.
A lot more, apparently, not just small improvements.
Okay. Beyond the pure financials, what strategic things jumped out at you from the call?
Well, the focus on user engagement is really key. Their Uber One membership program grew an amazing 60% year over year, now has 36 million members.
60%.
And here's the kicker. They found that users who use both mobility and delivery, the cross-platform users, they generate more than 3 times the bookings compared to someone who just uses one service.
3 times. Okay, so that whole super app idea is actually working financially. It's not just talk.
It seems to be a really powerful driver for them, get people using more parts of the platform.
And what about the AV strategy? Autonomous vehicles always get a lot of attention. Still a core focus, definitely a differentiator. They mention partnering with 20 AV companies globally now.
What?
Yeah, recent expansions. Austin with Waymo, Abu Dhabi with Ride, and that exclusive Waymo launch in Atlanta.
Over.
Plus new partnerships announced too, BYU, Lucid, Nuro, Wave. It's a broad approach.
How are they thinking about the business models for AVs? That seems crucial given the cost concerns.
Very interesting area. They laid out sort of a 3-tier robotaxi model. Seems designed for flexibility, maybe to manage that capital intensity.
Okay. What are the tiers?
First, a merchant model. Partners get a predictable payment, maybe per trip or per day. Simple.
Okay.
Second, an agency or revenue share model. More like how they work with human drivers now, sharing the fare.
Got it.
And third, an owned fleet model, where either the company itself or financing partners own the vehicles, and there's a software licensing piece to that too.
So different ways to scale without necessarily having to own every single expensive robotaxi.
Exactly. That flexibility could be really important for managing costs and scaling efficiently.
Right. And shifting gears a bit, but still tied to financial strength. That share buyback announcement, that was huge.
Oh, yeah. A new $20 billion share repurchase authorization.
20 billion, that's like 11% of their entire market cap?
Roughly, yeah. And remember, they still had about $3 billion left from the last authorization.
So the total firepower is $23 billion for buybacks.
23 billion. It's a massive signal, isn't it? It really changes the narrative.
How so?
Well, for years, everyone asked, can they actually make money consistently? Now, with $23 billion earmarked for buybacks, the question shifts. It becomes, okay, they are making significant money. How are they going to deploy it?
Right. From proving profitability to compounding it.
Precisely. It signals management's deep conviction in the business's profitability and their commitment to returning capital. They mentioned sticking to that plan of using about half their free cash flow for buybacks.
And they're still making moves internationally too, right? M&A.
Yep. Just closed the Trendyol Go deal in Turkey. That's a fast-growing delivery market. And they announced a new alliance with iFood in Brazil.
Brazil, Latin America's biggest market.
Yeah.
So consolidating in key growth areas.
Strategic moves to deepen that global footprint.
Okay, let's talk operations and audience. How are they growing users?
Healthy growth there too, audience up 15%. They talked about this barbell strategy.
Barbell, meaning?
Targeting both ends of the market.
Yeah.
So lower cost options like their Moto two-wheeler service that's already doing over $1.5 billion in gross bookings and growing at 40%, mostly in cost-sensitive markets.
40% growth, wow.
Yeah.
And the other end?
Their premium business. But that's over $10 billion now and growing at 35%. And within that, the reserve product, scheduling higher-end rides in advance, that's growing at 60%.
60% for reserve. So growth at both the low end and the high end.
Right. And it's kind of amazing, despite being such a well-known brand, they said only about 20% of adults in their top 10 markets use them monthly.
Only 20%. That implies a huge amount of room left to grow the actual user base.
Seems like it. They definitely don't sound like they're hitting a ceiling on audience growth anytime soon.
And what about Uber One? You mentioned the growth, but are they making it work beyond just delivery perks?
That's a focus. It's been a smash hit for delivery, obviously, but they're actively trying to boost its value for mobility users. They mentioned a new feature, Surge Savings.
Surge Savings. How does that work?
Sounds like members might get some protection or discount from those really high surge prices during peak times, addressing a common pain point, right?
Yeah, definitely. That could make the membership much more attractive for frequent riders.
Could be a smart move. And speaking of rides, the performance of the AVs already on the network is pretty striking.
Like the Waymo ones.
Yeah, specifically Waymo AVs in Austin and Atlanta. They said these vehicles are outperforming 99% of human drivers in terms of completed trips per day. They're just constantly busy.
99%. That's incredibly efficient.
It really is. And they also mention a positive halo effect. Basically, having these cool, efficient AVs around makes people more interested in the whole system.
Interesting. That efficiency must make them think about the long-term supply mix.
Absolutely. As AVs get better and more reliable, how do they fit in with human drivers? Their confidence in managing that mix, potentially becoming the go-to platform for AVs, not just their own. That's a key part of the long-term vision.
And one last operational point, they talked about externalizing their tech. What does that mean?
Basically, using their core platform technology for things beyond just rides and delivery.
Right.
Well, their advertising business is one example, showing ads within the delivery app. That's high margin. And also this growing platform for work.
Platform for work.
Yeah, using their network of earners, almost 9 million people globally for new kinds of tasks. Things like data labeling, translation, maybe tuning algorithms for AI companies.
Whoa. So leveraging that massive workforce for completely different industries.
It's a potentially huge pivot, transforms them from just a transport delivery company into something broader in infrastructure for digital work maybe, could unlock totally new revenue streams.
Okay, let's bring it back to the investors. We talked about that initial dip, the caution around AV costs.
Right, that robotaxi ROI is years away sentiment.
Despite the strong numbers now. But if you look longer term,
Zooming out, the stock's performance has actually been very strong. Over the last year, total return was around plus 48%.
which crushed the S&P 500, right?
Significantly outperformed, yeah. The S&P was closer to plus 22% over the same period. So while the immediate reaction to this specific call was muted, the underlying trend has been positive.
And there were things building expectations before the call, too?
Definitely. You had that Ackman stake back in February, the Trendyol Go deal closing, people anticipating this big buyback. Lots of positive AV partnership news, too.
And the overall industry seems okay, demand holding up.
Seems resilient, yeah. Global demand for mobility, food delivery, still strong. And the competitive landscape is shifting more towards autonomous platforms. Plus, you're seeing regulators in key cities, US and EU, starting to accelerate AV approvals.
Which kind of validates their long-term AV bet, even if it takes time.
It does. So, like we said, the narrative is shifting. Less about can they make money, and more about what will they do with all the money they're making.
So looking ahead, what are the key things you'll be watching? Near-term catalysts.
Okay, number one, Q3 guidance checkpoints. That'll be late October, see if they're hitting those strong projections.
Right.
Then milestones on the AV front, the Lucid partnership rollout, more Waymo City launches. How's that progressing? Early results from integrating Trendyol Go in Turkey. And, of course, the pace of that huge buyback. How quickly are they deploying that $23 billion?
Got it. Operational execution and capital deployment.
Those will be key to shaping market sentiment, I think.
Yeah. Okay, so given this whole picture, strong results, but a cautious market, big buyback, let's do this is not financial advice segment. Time for an outrageous but plausible idea.
All right, let's play that game. The disconnect is certainly interesting.
Yeah, the market seems stuck on the long-term AV costs, maybe overlooking the immediate cash generation and, crucially, that massive buyback.
It's possible. So what's the idea?
How about a bullish buyback arbitrage?
Okay, explain that.
The idea is you take a long position in the stock, maybe even use some long-dated call options, slightly out of the money, for leverage. And maybe you finance part of it or just hedge by selling some shorter-dated, out-of-the-money put options.
Okay, so long stock calls, short puts. What's the core thesis?
The thesis is that the sheer size of the $23 billion buyback, again, like 12% of the company, provides a massive floor under the stock price.
Right, consistent buying pressure from the company itself.
Exactly. And that this internal buying pressure will gradually force the stock higher over the next few quarters, overwhelming the market's current skepticism about AV spending.
So the outrageous part is betting the buyback alone can counteract the negative sentiment on CapEx.
Pretty much. And the plausible part is just the math. $23 billion is a lot of buying relative to their cash flow. You're essentially betting on capital allocation driving the price.
Selling downside volatility, buying exposure to that buyback-fueled upside.
Yeah. Of course, it's risky. If the whole AV story really sours or the economy tanks, that could overwhelm the buyback. But it's an interesting way to think about the current setup.
It definitely highlights how important understanding capital allocation is, not just the P&L.
Absolutely. So wrapping this deep dive up, we've seen a company hitting record performance, pushing hard on strategic growth like AVs and platform engagement, and making a huge commitment to shareholder returns with that buyback.
The story's definitely moved beyond just breaking even. It's about deploying serious free cash flow now.
Right. And maybe the final thought to leave you with is this. As they keep expanding, externalizing their tech, growing that platform for work with almost 9 million people, what totally unexpected areas might they disrupt next? If they can apply that platform model elsewhere, how could that really shake up the global job market down the road?
Something to think about. A provocative question indeed. Lots to watch here.
As always, remember this was just for informational purposes, definitely not financial advice. Thanks for joining us for this deep dive.